Joining me now is Skyler Weinand. He's the Chief Investment Officer at Regan Capital. Skyler, thank you so much for joining.
Thank you.
We are awaiting the close of the first quarter. Even though we see fractional gains on the week so far, it's certainly been a bumpy first quarter. How would you categorize it?
Well, it's the first quarter of the Trump administration, and investors are tepid. They're nervous about the big day, April 2nd, tariff day.
Yes.
And so we're seeing that even with strong inflation data this morning, higher than expected, bonds are actually rallying. Bonds are actually doing the opposite of what we would expect this morning because we're going into this weekend. It's only a few days away, and I think investors are really nervous what's to come on April 2nd with the administration.
Yeah. How are you advising clients that they adjust their portfolio and their investment strategies in this market?
Well, the short story is stay the course. We're in it for a very long time. We're going to see some bumps along the road that we've seen in the past few months. But if you're trying to position yourself and try and be tactical here, look at defensive sectors. Look at healthcare. Look at defense. Look at really stable. Potentially diversify internationally as well. Mm-hmm. And then on the fixed income side, stay short. You're not getting paid to go out and invest in long duration paper. You can sit in cash, you can sit in floating rate bonds and earn upwards of 5.5% in really safe paper without having to take on undue credit risk or undue interest rate risk.
Let's talk more about tariffs. I had seen some estimates as to how it could impact the auto sector, but we know many sectors here potentially are vulnerable. How does that impact earnings estimates for corporate America?
Earnings have been so good for the past couple years. The stock market's been on an absolute tear. So on how we look at things on a quarter by quarter, on a year by year basis, earnings have to come down. Okay. So that's part of the reason stocks are down this year is folks are worried about tariffs. Folks are looking at layoffs. Folks are worried about consumer expectations. Nervousness or fear is as high as it's almost ever been. So people aren't spending.
Yeah.
Corporations aren't spending, they're pulling that back. So I think that's really going to affect top line revenue numbers and earnings.
Interesting. I do want to talk about the Federal Reserve's next move, including with the recent inflation data that we got this morning and new estimates, economic projections last week in those summary of economic projections. Where does that take the course of borrowing costs?
Look, not that many folks look at those what the Fed does each quarter, where they're actually projecting lower unemployment and higher inflation in the near term. Okay, and we saw that in today's data, where core PCE was higher than expected, and so it's going to be incredibly difficult for the Fed to cut. Okay, I actually think their next move might be to raise rates sometime this fall. Because inflation might get out of control and they don't want to have another 1970s type of episode.
How would the market absorb that?
Well, the market's absorbed high rates fairly well. Okay, consumers in aggregate are doing excellent. Corporations in aggregate are doing excellent. We're looking at the lowest debt levels on record for U.S. corporations. So I think they're going to convey it. We'll see in the summer how the Fed conveys it. It's not really on anyone's bingo card right now that the Fed's going to raise rates soon. But investors should definitely be mindful of that, whether you're looking at locking in rates or whether you're looking to refinance right now.
Interesting. So when it comes to positioning defensive sectors in the short term, but long term, you're still very bullish, it sounds like.
Very bullish on America, very bullish on tech, very bullish on AI. You have to continue to be invested in those sectors so as not to miss out on the next NVIDIA.
So would you be buying the dips?
Oh, for sure. This is a great time to really look at, if you're able to buy in at 10% down with a long-term horizon, a 3 to 5 year horizon, I think you're going to benefit.
Interesting. Skyler Weinand, he's the Chief Investment Strategist and Officer at Regan Capital. Skyler, thank you so much for joining.
Thank you.
It's great to have you.